Okay, so I've purchased my home at 7%,
Yeah.
and now we're a couple years later and rates have dropped down to 5 or 4.5. What does it look like to refinance?
Yeah, it's really easy. We have all your information, obviously. We work together, we have a relationship. Interest rates are lower, and we want to give you a lower monthly payment. You just call us up, same thing. We'll have a 15-minute phone call. You might submit your most recent mortgage statement. You might send me your most recent pay stub so I can just make sure that you're still employed and making money. And it really is as simple as, let's look for an interest rate for you. What term do you want? How long do you want the loan to be? And we go through the process. It's really simple and easy. And oftentimes, if I originate the loan, I can do your refinance at a zero cost for you.
Whoa,
Yeah.
That's huge.
It is huge. So we'll waive all the funding fees and all that in-house. If I originated the original mortgage, I'll do the refi at no cost. Yeah.
Whoa. Yeah.
Yeah.
That's amazing.
It is amazing, yeah.
Yeah, that's huge.
Yeah.
Okay. What is the difference between a fixed rate and an adjustable rate
All right.
mortgage?
A fixed rate mortgage is a mortgage where when we close the loan, when we close and you get the keys to your house, whatever we agreed upon, whatever's signed on that piece of paper is what your mortgage is for the duration, the life of the loan. Whether it's a 15-year, 20, 25, 30-year, you're going to pay the same amount of interest for the life of that loan. An adjustable rate loan, and I'll keep it really simple because adjustables could get complex, but essentially they're fixed for a certain period of time, could be anywhere from 1 to 7 years of a fixed interest rate, and then they're susceptible to adjustment. And these adjustments can come at different time intervals throughout the year. Without getting into the weeds of explaining like why the interest rate adjusts and how those adjustments are what they're based upon, like the index and the margin, essentially what you need to know is that it's fixed for a period of time, and then it is susceptible to adjustment, meaning it can go up or it can go down. Now with these adjustable rate mortgages, there are typically ceilings and floors, which means it can't adjust more than a certain amount upward, and it can't go below a certain amount downward, and there are maximum adjustments per adjustment. So it can't just go all the way to the ceiling on one adjustment, it has to do so incrementally, and there's rules and guidelines. Now, adjustable rate mortgages got a bad rap. This is really what got a lot of people into trouble in the 2008 housing crisis. And there's a laundry list of reasons of why, but a lot of those mortgages were poorly made. They did no document, no income verification. If you could fog a mirror, you would qualify for a mortgage. Based off of stated income, you could just say, they'd say, how much money do you make? And you'd say, I make $1 million a year. And they'd say, congratulations, here's your loan. What really got people into trouble is with these adjustments is they also had balloon payments. And a balloon payment meant you had this lump sum of money due all at once, okay? The federal government has since stepped in since the 2008 housing crisis and heavily regulated these adjustable rate mortgages. And there are concerns that buyers should be aware of, but these are really powerful tools because adjustable rate mortgages often price much lower than fixed rate mortgages, especially on jumbos. We live in Washington. Every house around here is almost a jumbo loan. And jumbo loans on adjustable rate terms that are fixed for anywhere from 3 to 5 years typically are pricing a full percentage point lower than conventional fixed rate mortgages. And again, it's knowing where we are in the market cycle. Do we think interest rates are going to go down? It's a great strategy right now. I have a client who's closing on a jumbo, and we're pricing them lower than a conventional interest rate. We're fixing it for 5 years because we're betting that we're going to be in a lower interest rate environment 5 years from now. And when we are, we'll just refinance it into fixed long-term debt at the interest rate that they are trying to target. And so they can be really powerful tools. You just need to be aware of how to use them.
So I have made an offer on a house, it's been accepted, and now there are closing costs.
Yeah.
How much are closing costs, and what are they?
Yeah, so closing costs typically span between 1% and 3% of the loan amount. And closing costs cover all kinds of things. We have your prepaids, for example, when you buy a home, you have to pay for things in advance, like your insurance, there's a buffer of taxes, there's title fees, there's inspections and appraisals, and closing costs kind of bundle all these up. They wrap it up, and they are itemized on a loan disclosure or a loan estimate and then a closing disclosure. They're just fees that need to be paid to close the transaction. You're typically going to see things like the funding fee. There's teams of people that are working to verify your loan and underwrite the loan, and those funding fees are typically anywhere. They're probably about $1,000. It's about $400 for underwriting and around $500 for processing. And then you have title fees and so on and so forth. Fees can vary. What makes fees vary is, the area that you're buying in, the taxes that are included in it, how much the appraisals cost, all those types of things. Every time a buyer goes into the process, they're going to get a detailed line item receipt. We call these disclosures. And a good mortgage advisor will always go line by line by line and explain to you every single item on that receipt, so you know exactly what you're being charged for. This could also include points that you're paying for a lower interest rate, so on and so forth.
So what are some things that you wish buyers knew?
I wish buyers knew how easy it was to actually buy a home. And I don't want to say that because if you're struggling out there and you're having a hard time buying a home, I'm not trying to minimize how big of a move this is. But I really think people make this more complicated than it actually is. There's so many ways and examples I could point to for why the government actually makes this really easy and incentivizes Americans to go through the home buying process. I wish people weren't so afraid and they just took a little bit of action to have a 15-minute phone call, because this one phone call could change your whole life. It could change the trajectory of your whole life and generations to follow. It's a lot easier than people understand, and I just wish they knew that.
So what are some common mistakes that buyers make?
Yeah, so the biggest mistakes I see buyers making, and this contributes to them possibly not being able to purchase at the moment that they want to purchase, is they wait till the last minute. They start shopping and get emotional before they get a pre-approval. You really, really want to know what you're shopping for. You don't want to get your hopes up. I see people buying things that they shouldn't be buying right before. So, for example, cars. If I could point and circle one thing that disqualifies buyers, it's a car. It's a car payment. If you have two people that have two auto loans and those auto loans are adding up to $1,200 a month, that's a mortgage payment. And if you want a car, get a car. But if you're going to buy a home, maybe just pump the brakes, wait a couple months, close on the home, and then go buy that car. Moving money around without talking to their mortgage advisor, we need to trace where those funds are coming from. People that go out, they start shopping for a home and they start buying furniture before they've moved in, and they rack up all these credit card debt, things like that. Those are common mistakes that people make. But I would say the biggest mistake by far people make is simply just not taking action. Just pick up the phone and make a phone call and start learning and gaining information. And the longer you wait on the sideline, the more opportunity it's costing you. So the biggest mistake that people make is just not taking that first little step.
Let's say I own a home,
Yeah.
but I'm interested in purchasing a second home.
Yeah.
So what are some financing options if I don't have enough just liquid cash?
Yeah, so on subsequent purchases, you could do that in two categories. You could do it as an investment property, and you have to put down anywhere from 20 to 25% of the purchase price, money down. Or you could buy it as a second home, and second homes, you get an incentive where you only have to put 10% down. So you could buy a second home, which is also considered a vacation home, or you could buy an investment property for 20% down.
Are there restrictions to if you are not going to live in the home as far as...
The second home?
Yeah, the second home.
Yeah, so as far as the second home, there usually are geographical rules. So you can't buy a second home in the same neighborhood that you live in. It has to make sense, right? It has to be in a vacation destination or, somewhere maybe outside of town, a cabin that you and your family like to frequent on the weekends. It has to make sense on paper. We want to really be careful. Mortgage fraud is probably It's one of the biggest crimes in the United States. In fact, the FBI has their own division devoted solely to mortgage fraud.
Wow.
Just for that purpose. There have been people in the past that have taken advantage with, second home financing right down the street, and they really use it as an investment property. If the story makes sense, we can justify a purchase, but we really have to be making sure that we're purchasing a second home for a vacation purpose, and the location and the time to get there makes sense as a second home.
So I couldn't purchase a home that's just right down the street from me?
Not as a second home. You could purchase it as an investment property.
Okay.
Yeah.
And then with that, if it's an investment property, that comes with some other little bells and whistles, right?
Yeah, so investment properties are pretty cool because what we can do, if you've never owned an investment property ever, we can go purchase an investment property. It's 20 to 25% down, but you're going to get hit with these debt ratios. And people are often asking themselves, well, how the heck can I afford 2 housing payments on my income? Well, with the rules for investment properties, we can do this really cool thing. We can take a lease agreement of what we think projected rents are going to be in the area, and we can apply 75% of that total rental income to reduce your debt. We can take the total rent that you're going to collect, and we can give you 75% of that, not to use as income, but to offset the debt. And it's a really useful tool to buy an investment property, even if your debt to income ratio might be too high with the full payments of both homes.
So what is your favorite thing to do here in Tacoma, or what is,
Yeah.
What are some of your stomping grounds?
Yeah, so I have a lot of history in Tacoma. I kind of feel like I grew up here, even though I'm not from here. I'm from Colorado, but I got stationed in the Army at Fort Lewis here when I was 18 years old, and this area...
Did you have the beard
when
you were 18?
What? I couldn't grow it. It was spotty. The beard's a new addition, actually.
Oh, okay, solid.
But, some of my favorite things to do here, I love Point Defiance. Honestly, our family is around Point Defiance once a week or every other week. I just love it. I just think it's so beautiful. I like walking down by the waterfront. Washington is an incredibly beautiful state, especially in the summertime. Yeah,
agreed.
Yeah.
So if people have questions, if they would like to know more information about what you're talking about, or things that you have going on, how would they do that?
Yeah, so I really devote my life to giving people this information so that they can take a hold of it and go change their life. I don't know if you can tell, Carl, but I'm really passionate about these topics because I believe in them, because they changed my life. And if they can change my life, they can change everybody else's life. I didn't come from money. I didn't have a financial education. I literally just picked up books and had to just beg people for information. And I realized it was such a powerful tool, so much leverage. I wanted to package it and give it to other people. And so I've really made this accessible, this information, on a couple different platforms. You can find me on Instagram. I'm giving away information all week long. I'm always producing videos at Gurule Tim. That's at GURULETIM. I have a podcast. It's really focused on investing and removing your limiting beliefs. And we interview everybody from real estate investors to mindset coaches. It's about helping you get to the next level. And that podcast is found on Apple and Spotify. It's the Dynamis podcast. And it's really becoming a huge passion project for me. And lastly, if you're in the area, if you're local in the Tacoma, Olympia, Seattle area, I host an investor meetup called Pints and Properties, and we rotate breweries. And it's a really fun experience. You just come in the room, you network, you meet people, and there's everybody from the person who's never done a deal, who's just starting, who maybe wants to buy their first home to live in, all the way up to people who are just killing it doing large commercial deals, who are transacting, who are buying mobile home parks. It's all about, getting creative, getting the financing, building the community. It's for people who are passionate about changing their lives and want answers, and everybody there is just there to help each other and encourage each other and pour into each other. And I would say those 3 places are really, the combination of them are magical. And if you're at the Pints and Properties, come up to me, introduce yourself. I'd love to meet you and get on your team.
Nice.
Yeah.
Nice, dude. Thank you so much.
You're welcome, Carl. You're welcome.